Hi, I'm Jim Jubak and welcome to my YouTube video for today, April 20th. I hope you all survived your taxes. They were due on Monday. If you like the videos, you can get more by subscribing to my YouTube channel. If you want to see more of my stuff, you can get it on my free site, jubakpicks.com. If you want more, so that's 6 portfolios instead of 3 and options and some ETFs, you can subscribe to my paid site, and that's jubakam.com, and all the links to that stuff down below. It's post-Netflix Wednesday. The stock is down still another 35%. Let's look at a chart. Hasn't been a great year. This is Netflix year to date. It hasn't been a great year down, but it looked like it had stabilized in here. And then yesterday we got news that the company had lost 200,000 subscribers in the first quarter, and B was looking to lose another 2 million subscribers in the second quarter. And so we're plunging down to 35, down by 35%. It was down 26% in after hours. So this is another 10 percentage points down from where it was then. What's interesting to me about this is that I don't think the Netflix problem is an isolated one. A couple of weeks back when I did some sells that were related to inflation and the possibility of recession, one of the ones I suggested was Netflix. I didn't suggest because I had some kind of magic ball insight into how many subscribers they were going to lose. I suggested it because inflation and a slowing economy all really sort of wreaks havoc with discretionary spending. And one of the things about the streaming business is that the average household which has any streaming accounts has 5, of which Netflix tends to be like the priciest, depending on where you are in the tier system. But a lot of companies use Netflix's prices as a kind of umbrella so that Disney, for example, Disney Plus is about $1 a month cheaper than that. And that's no accident. What we're looking at right now is 2 trends that both amount to demand destruction. The way the Fed sets out to fight inflation is it raises rates, and the whole point is to suppress demand. That's the way by lowering consumer demand, by lowering industrial demand, you gradually get prices to come back down. So demand destruction is the goal of Fed policy at this point. If you think that's nuts, well, you're not alone. Much of capitalist economics is crazy as far as I'm concerned, but this is the way the conventional thinking goes. The other part of this, and this is where the Netflix comes in, is that you get demand destruction from inflation before the Fed moves. People are aware that prices are going up. People are aware that their income is not going as far. So they're cutting back. They may go to Dunkin' Donuts instead of Starbucks. You get demand substitution. You get people saying, hey, I don't need 5 streaming accounts. Maybe I'll do with 4, or maybe I'll just piggyback on Johnny next door and his Netflix account will share passwords. All those things tend to suppress and destroy demand. And I think that's what we're seeing, sort of like an imperfect storm, if you will. Demand destruction from inflation itself, and demand destruction because the Fed is going to destroy demand as it raises rates as a way to fight inflation. The end of both of those is less demand, which unfortunately can lead to a condition called recession. We're talking about a lot of higher rates. We're talking about people going, oh, okay, I can't afford that. And seeing this demand destruction from inflation right now and from Fed policy to come. And both of those are pretty negative for the economy, for the stock market, and just for people's pocketbooks day to day. Okay, thanks for watching. If you like this video, give us a like, subscribe to my YouTube channel so that you get notification when we're doing the next one. We're doing about 3 a week. If you want more of my stuff, you can go to my free site, jubakpicks.com, and that has portfolios that don't include Netflix at the moment. And in fact, as far as I can remember, never have. But there are other stocks in there and alternatives to growth stocks and whatever. So 3 portfolios on my free site, 6 portfolios, including some options and some ETFs. We've been doing a pretty interesting options play on Delta, on airline stocks, on the paid portfolio. So please take a look, and that's Jubak AM. You can see all that stuff, links down below. Thanks very much for watching.